Okay.
All right, how you doing this week, Steve?
Well, I'm doing all right. A little stressful right now. And by the way, I have another daughter that's having a birthday. Today is her 16th birthday. So my
Wow.
youngest daughter turned 16 today. And so any birthday gift recommendations for a 16-year-old?
A car.
Okay. Besides that, she's got to get her. She
Uh,
can't get her license because the DMV's been closed. Like they just reopened like not too long ago. So she
yeah,
still needs to get her permit.
yeah, it's interesting. Well, so anyways, yeah, I don't. I, you're putting me on the spot here. No,
Okay.
nothing that comes to mind.
All right.
It's interesting that at 3:15 in the afternoon on her birthday, you're asking for gift recommendations. So obviously something between here and your house is where you're going to be going for a gift.
Well, her party's tomorrow, so I think I still
Okay.
have like 24 hours. I think so.
All right.
I know.
Wow. So one thing I thought we could talk about was this proposed California net worth tax that kind of made it into the news.
Yeah.
You
Yeah.
saw that, I'm sure. So, California is in a lot of trouble from a budgetary standpoint. And by the way, I don't know how they know this for sure, because, you know, a half a year ago, they were they had a lot of excess money. There was a budget
Yeah.
surplus,
We had
and
a
then
rainy day
now,
fund, I think, right?
yeah, there was a lot of extra money, and now suddenly I mean, it's not that we don't expect that there's been huge amounts of spending on everything that's been going on,
Yeah.
but they're already proposing these new taxes. I mean, there's been just a California personal tax rate increase. But the interesting one was this new net worth tax that was proposed. So I think most people are familiar with the estate tax, which is a tax on the net worth of individuals that die, and
Right.
that's a federal tax. Just as an aside, I remember way back in the day when there was a California estate tax. By the way, you
Oh,
filed a
yeah.
return to California and to the IRS.
Hmm.
But
Is that when Ronald Reagan was governor?
I'm not quite that old, but close. But so this tax that was proposed was is not at the death of a person. It's every year. It's a tax on the value of their estate. So in theory, that's a double tax, right? If you've earned the value of your estate by income that you've accumulated through the years, you've already paid tax on that, and then you're going to be taxed on the value of the assets that you hold as well.
Right.
So this would be a 0.4% tax on every year, not just once, but every year on the net value of your assets. And I'm worried about you, Steve, being subjected to this because
Yes.
it's on the value of your assets over $30 million.
Okay. Well, I've got mine offshore in all kinds of other accounts, so you don't need to worry about me.
So it's definitely one of those things that makes the headlines, but it's the exposure to the average taxpayer is minimal.
Well, I think the other part of this that really gets people riled up, even, I mean, as much as that is, if I leave California, I'm still subject to that tax for another 10 years. So California, I guess, is saying, hey, you earned that money while in California, while you lived in California, you accumulated those assets, and we want that 0.4%, even if you leave the state.
Yeah, yeah. So I mean, I don't know. I don't claim to be a constitutional expert, but I do think there's some issues with that. Although you brought it up earlier, we've seen we've seen the courts rule that businesses can be subject to sales tax requirements even when they have zero presence in another state.
Right. Yeah.
So that's that Wayfair decision. And as an aside, if our clients are listening and they have a business and they're not familiar with this, if you're selling goods to customers in another state, you may think that you don't have a requirement to withhold sales tax from those customers, but you may, given the volume of business that you're doing in those other states.
And I think in California, boy, I'm going to go out and probably wrong, so let me caveat this. But I think if you live in another state and you're selling to California, it's over $500,000 worth of sales in California, then you have to register and pay district tax in California.
Yeah, so California's threshold, you're right, is $500,000. Each state sets their own threshold. So
yeah,
I've looked at this a few times, and most of them are around that number, but there are some that are lower at like 50,000, 100,000. So definitely need to be aware of that. But anyways, that's kind of an aside.
Yeah.
The issue is this whole moving out of California to avoid taxes and this net worth tax, which doesn't, I mean, it doesn't seem like it's likely to pass. It's just
right.
a proposal. But it brings up, I think, the discussion for you and I, which is, hey, you know, we hear from clients all the time who bring up like a cocktail discussion item that they've heard.
Right.
Of, well, I'm just going to move out of California and I don't have to pay any tax on my business that is my California business is generally generating a lot of income.
Right. Yeah. I mean, I think that, yeah, in fact, I had two people yesterday say, hey, I'm thinking I want to leave California. What do I need to do to avoid California tax? And I think there is no easy answer to that. I mean, if your business is physically present in California, then you're going to be subject to California tax. It's going to be sourced to California. But if you move out of state, I still think that there's potential that if the end user is in California, there's a possibility that you may be subject to California tax on that too. The rules are very complicated and it's industry specific. So you need to look up, I think, how the states look at your particular sales.
Right, but the general rule to address that misconception is if you're a resident of California, you're taxed on your worldwide income to the state of California.
Right.
If you're not a resident of California, then you still pay California tax on income that's sourced to California. So that would be, in a big picture standpoint, it would be if that's rental from a property that's in California, if that's an operating business that's physically located in California, or you're living outside of California, but you're providing services to customers that are inside California.
All right.
So the bottom line is, it's not the magic bullet necessarily to move out of California to avoid California taxes.
Yeah.
But with that being said, we've both been hearing a lot of people asking the question, and even we've heard from clients who are moving out of California. It seems like the trend is starting again.
Yeah. Yeah. For sure.
I can remember in the early 90s, you couldn't, you couldn't rent a U-Haul trailer because they were all rented and they all went out of California and didn't come back, kind of a thing. And I see that kind of thing happening again. It's interesting.
Yeah, it is for sure. So.
All right. Well, that's a good topic that I think it helps. I don't know. It's one of those things I always face is those questions from clients saying, hey, well, I talked to somebody and they said that they're avoiding this tax or avoiding this that tax by doing this or that. I think it's always good to try and.
Well, and there was always those radio ads too that basically incorporated in Nevada and you don't pay any California tax. I mean, that was always something that we're like, no, you have, you're registered in California. And we both know California is very aggressive in some of these, in going after people for their $800. That's for sure.
Yeah. I talked to a client yesterday and said he's got a business that's making a lot of money and he's calling me about moving out of California. And I said, well, do you have a home anywhere else? And he said, well, I have a home in New York. Well, that's not really going to do much for you.
Yeah, exactly.
Anyways, good topic.
All right.
See you next week.
See you next week.
All right.